Hello, I'm Sarah Godfrey, Investment Trust Analyst for Capital Access Group, and I'm pleased to share an update on AEWU UK REIT, a real estate investment trust that offers sophisticated exposure to the UK commercial property market via a value-orientated approach. AEWU aims to deliver a high level of income alongside capital growth by acquiring smaller, undervalued commercial properties, predominantly outside London, and enhancing their value through active asset management. At the core of AEWU's strategy is a commitment to identifying mispriced assets and generating value through hands-on asset management. The fund managers, Laura Elkin and Henry Butt, leverage AEW's extensive resources to select properties in strong commercial locations but with lower capital values than many London-centric peers. This approach allows AEWU to deliver a net initial yield in the range of approximately 7 to 10%, positioning it among the higher yielding options within the UK commercial property sector. The Trust currently holds 32 properties across the UK, targeting smaller assets outside London, nearly 95% of the portfolio, where it sees opportunities for stable income generation and value appreciation. These properties are selected based on rigorous value assessments and a focus on long-term total returns through both rental income and capital appreciation. AEWU's active management also includes exploring alternative uses for properties. Although they may be acquired at attractive prices, these are not low-quality assets. Rather, they could be seen as ugly ducklings that are able to reach their full swan potential as a result of AEWU's asset management activities. I'll take a moment to talk more specifically about the portfolio. AEWU's properties are let to a diverse base of 131 tenants, providing a solid income foundation while helping to manage risk through tenant diversification. The portfolio's weighted average unexpired lease term, or WALT, is approximately 4.5 years to break and 5.9 years to expiry, providing stability and visibility into future income, while remaining nimble and opportunistic. The portfolio's current net initial yield stands at 8.1%, with an additional upside potential reflected in a reversionary yield of 8.64% as of the end of September. The Trust recently signed a 25-year lease with a bowling and entertainment operator in Dewsbury at a 70% premium to the vacant estimated rental value. This lease not only supports rental income growth, but also underscores the latent value within AEW's portfolio that it actively works to unlock. Another strategic move was the sale of the Oak Park industrial site in Droitwich, which was sold at a 33% premium to its March valuation, marking AEWU's 19th successful property exit since launch. On average, these disposals have generated a 36% premium over their acquisition prices. If we focus on financial performance, AEWU continues to deliver robust results, underscored by consistent income generation and capital growth. Its 5-year annualised property total return reached 9.6% as of June 2024, which is particularly notable given the challenges in the broader property market over recent years. Additionally, AEWU has achieved full dividend coverage again in recent quarters, highlighting the strength of its income-focused approach. The Trust's dividend yield currently stands at an attractive 8.4%, supported by a quarterly payout of 2p per share, or 8p annually. The dividend has been maintained consistently for 36 quarters since the fund's launch in 2015. Even during the pandemic, AEWU held its dividend steady, setting it apart from many of its peers who were forced to make cuts. This consistency underscores the resilience of its approach and commitment to delivering reliable total returns for investors. The performance has been recognised widely within the industry, with the Trust having been named Citywire's Best UK Property Fund for 5 consecutive years from 2020 to 2024, based on 3-year NAV total returns. Additional awards from Shares magazine in 2022 and Investment Week in 2023 further affirm AEWU's successful track record in both income generation and capital growth. The Trust also recently received the MSCI UK Property Investment Award in the Listed Property Funds category, awarded for its 3-year property total returns to the end of 2023. In terms of valuation, AEWU's shares currently trade at an approximate 11.5% discount to NAV, a figure that has narrowed recently but remains wider than the Trust long-term average. Given the broader REIT sector has experienced tightening discounts amid recent M&A activity, this may present an attractive entry point for long-term investors. The current environment, with UK interest rates starting to come down, adds further appeal, especially as REITs offer an income-producing alternative in a changing tax landscape that's making traditional buy-to-let investments less attractive. In conclusion, AEW UK REIT continues to demonstrate the effectiveness of its value-orientated, income-focused strategy in UK commercial property. The Trust's high yield, stable dividend and consistent portfolio management make it a compelling choice for investors seeking both income and growth potential. Thank you for your time today, and I look forward to sharing more updates with you in the future.